Please welcome Stephen A. Schwarzman, Chairman, CEO, and Co-Founder of Blackstone, for a conversation with Bloomberg's Francine Lacqua.
Hi, Steve. Thank you so much for joining us.
Well, it's my pleasure to be here.
Steve, when you look at the world economy, we talk about inflation, we talk about fragmentation. What does it mean for deal making? I know leverage is going up, but things could be getting cheaper. Is it conducive to more deals?
Well, I think it takes a while, Francine, in terms of the balance between what sellers want and what buyers want. And usually when you have market declines, it takes about a year and a half before the sellers to forget what their companies or their assets used to be worth. And by 2 years into that cycle, you start seeing a lot of activity. We're already seeing activity in Europe in real estate, for example, because people become forced sellers, given the dramatic increase in interest rates, and then financial institutions wanting to provide less leverage. The owners of assets have become structural sellers to reduce their leverage. So we're already seeing really terrific opportunities there. And it's just a matter of time before that happens in other places in the world.
So what kind of real estate things are you trying to buy? I know there's a lot of concern about commercial real estate and where that ends up. It could be the next big thing to fall. What does it mean for private equity money?
Well, I think you're seeing a lot of pressure in commercial real estate in offices. And in the United States, for example, there's 20% vacancy in offices, and another 20% sort of empty because people are working from home. So that subcategory of real estate is showing a lot of strain. On the other hand, the kinds of things that we own, which are warehouses, it's about 40% of our assets, those are going up double digits in terms of rents. And when people's lease expires, they're pricing up 40 to 50% because rents have gone up a lot in that area. So that's a very strong concentration. And we're seeing the ability to buy continually warehouses, increasing what we do, and we're the largest owner of the world privately of that asset class. And so it's important to be really selective when you're looking at buying real estate. We also have data centers, which have had a huge explosion along with artificial intelligence, and that's become an extremely interesting investment class.
Steve, how is the growing influence of Middle Eastern sovereign wealth funds actually reshaping private equity?
Well, I started coming to the Middle East, I guess it was 1991, and a lot of the countries actually had just started funds, or the funds weren't even investing in limited partnerships. And now the Middle Eastern sovereign funds have revolutionized capital and providing capital for all kinds of different projects and investments in funds and co-investments. And it's one of the most vital parts of the world because the amount of money that need to go into the individual countries is less than the amount of the income that keeps increasing the scale of the funds. There's been an enormous professionalization of the investment process over the last 30 years. And so it's fun to be dealing with everybody in that part of the world.
How do you see it changing? We worry about fragmentation, about being in a very polarized world. Certainly US-China versus China is taking a lot of headlines. What does that mean for the flow of capital?
Well, I think capital is still flowing. Trade has been affected, and there's the start of capital flows starting to be affected. And I think that's a net negative for the global economy. And I think everybody is concerned about that. and even geopolitically, the kind of muscular politics only goes so far before it starts creating very adversarial types of relationships, which are not good for any country.
Steve, you mentioned certain possible deals in Europe. Is there anywhere else where you see leverage still being advantageous enough for you to go in quite aggressively?
Well, I don't think, Francine, it's the leverage, because we can always borrow money. It's a little more expensive. The expensive money isn't as important as the goodness of the company and the price. And we still haven't gotten prices low enough in the United States. People are still somewhat optimistic, but if you look at what's happening with the economy, U.S. is only 1% growth of GDP. That's in real terms. And the Fed has raised rates sufficiently that it's really going to start slowing the economy. That always happens on a delayed basis. So I think the buying phase will have to wait for a bit in the States.
Do you worry about a policy mistake from the Fed?
Well, I think everybody worries about those. They missed the inflation. We were talking about inflation publicly, close to a year before the Fed was, and then they called it transitory. And we could see from all of our companies that was not the case. And so they've overreacted. I shouldn't say they've overreacted. They reacted late, and they reacted in an exceptionally strong way. There's still a debate as to whether to pause now or continue to increase. I think Jamie Dimon yesterday said he could see 6 to 7% rates instead of the 5% area. That's possible. Hard to tell. The economy actually, in terms of inflation, we think is doing much better on the inflation front. The way we look at what's happened with the U.S. economy is we think inflation is in the low 3% category, not 4.9% as publicly reported. And the reason for that is that the shelter category, which is over 30% of the index, is done on an average as opposed to exactly what the costs of rent are now. And if you looked at the costs of rent today, not an average, and put that in the CPI, you'd be around 3.2, 3.3. So the Fed, in effect, is having more success than the market thinks.
Is the market, though, focused so much on cuts by the end of the year that they're miscounting or misjudging this higher for longer interest rate environment that could really change the way markets operate?
That's my view. Usually when people say things, they mean them. I think because the Fed was late to the party in terms of increasing rates, they want to make sure that this is not an Arthur Burns moment where they release the pressure too quickly and then they have to do something else again. So I would expect them to stay where they are through year end, although frankly, no one in the world knows the right answer to that. They're educated suppositions, and we'll see what happens. But there's still a resilience to the economy that exceeded what people expected.
Steve, we're in a room full of big investors and sovereign wealth funds. How should they view the possibility of the U.S. defaulting?
Well, I was watching TV early this morning and seeing the updates. It's sort of somewhat difficult to imagine this is actually going on. It's a political standoff. I think the two parties are about $100 billion apart on freezing the spending levels. I think that could be negotiated. One of the other issues is whether people have to work to get supplementary payments. And I think there's a position that could be resolved relatively quickly on that. So this is somewhat an issue of wills and desire to not blink, and the whole world is watching, and so I think it could be resolved in the 2011 fiscal cliff negotiations. It actually got done a little late, and something like that is one of the numerous scenarios. I don't foresee a situation where there would be a default that speaks to the U.S. government paying principal and interest on a timely basis. If something were to happen, really as a miscalculation on the part of the people involved with the negotiations, I think it would hit domestic constituents in the U.S., which would put enormous pressure to have things resolved in a few days. So it's a bit of a nail biter, if you will, and we'd all like to see it resolved, and it all will be resolved. The question is exactly when in that time period it is.
But Steve, do you worry that even if we don't have a default, there's some kind of credit event if we have an agreement in the 12th hour? And again, is there a war room that you do game theory on what could happen to investments and what worst case scenario could be? We know JP Morgan has a war room.
Well, JP Morgan also has huge amounts of derivatives, the largest center of derivatives in the world, and they should be focused, and they are. They're terrific at what they do. For people like ourselves and for normal investors, I think we look at this as a relatively short-term issue. You could have quite dislocated markets for a short period of time if the U.S. government doesn't resolve what it's doing. But on a longer-term basis, I don't think this is an issue, because it'll be resolved very quickly, that one needs to be overly concerned about. If you're a trader and you're setting up positions, it's a wonderful time for volatility. If you're a long-term investor like ourselves, you look at this with a different perspective.
Steve, at the same time, we had the banking crisis in the U.S. It was short-lived, but are there any legacy issues for some of these regional banks? What does it mean as regional bank retreats? Are you looking at opportunities to pick up lending market share anywhere in the U.S.?
Yeah, well, we are very large in terms of providing credit at Blackstone, and we called it a golden age for our credit business. And what we're doing is we're having conversations with a number of those regional banks because we're interested in buying assets that they create. And we're looking at partnerships with some of them because they're worried about how many assets they keep on their balance sheet. And as a result, we're natural partners, and we can help them, and they can help us fill up our needs for investments. What I would say, in the first part of your question, is that the pressure on those regional banks won't just come from the markets, it'll come from regulators. And that will make them less apt to provide credit, and they are important institutions. It's just not our money center banks. For example, 75% of real estate lending is done outside of money market, money center banks. And when that gets cut off, that hurts construction, that hurts jobs. And so we see an opportunity for firms like Blackstone to fill that void, to help the economy, to keep sort of the economy growing. And in finance, there's always a certain level of endless change that goes on. and we think this change will benefit what we're doing.
Steve, we're also, of course, in a U.S. election cycle, which usually means that the markets are a little bit nervous about what's happening in the U.S. You're a major donor to the Republican Party, but so far you've held out in backing any one candidate. Why?
Well, it's early days. My goodness, there are only a few people, who've declared. There are other people entering, on a almost daily basis. I've met with all of the candidates. I know them, and today we're having Ron DeSantis, for example, is announcing, and Elon Musk is going to be interviewing him on Twitter. That's the new world. Tim Scott announced on Monday, and he's a senator, has very substantial financial backing. Chris Christie and Mike Pence are rumored to be wanting to enter the race in the next few weeks. You have a lot of other candidates. What's interesting on the Republican side, besides Donald Trump, you have a variety of other candidates, all of whom are quite strong and very experienced, successful governors, senators, and there's going to be a very interesting election. It's 8 months until the first vote, and people in the audience and the rest of us will be bombarded with media over the next 8 months. Who's where in this contest, and it only really matters once people go to the polls.
But so between DeSantis and Tim Scott, who do you think should run for 2024? Do you have a favorite?
Well, they're both friends of mine, and I think Ron's going to be extremely well funded. He's very organized, and in the polls, he's the leader among the non-Trump candidates. Tim is a really good guy and well-intentioned, and has come from a very humble background, as has Ron. It's part of the American dream, if you will. You start with nothing, no money, no background, knowing no one, and you end up being discussed on a stage in Qatar. How remarkable is that, actually?
Would you donate to the Trump campaign if he was Republican nominee?
I said publicly after the midterms that I think it's time to move on to the next generation of candidates. And I said that for both Republicans and Democrats. The Republicans have had a string of losses in 2018, 2020, the runoff in 2021 in Georgia, the 22 midterm elections. I think it's time to win if you're a Republican, and that means we have to make some changes.